The silver market is getting hot and ugly, so those of you who own actual silver should be happy. Apparently, the silver market collapsed over the weekend, and India ran out of silver. Now, let's begin. Visit SD Bullion's online store to purchase precious metals. Visit sdbullion.com/new to purchase gold or silver instantly. It means the world to me that you tuned in. Your kindness is deeply appreciated. An ounce of silver is maintaining a price above $50. At the moment, it is 52.28. Looking at the silver price year to date, we can observe that we have gained almost $23. This is a tremendous increase for the year, and silver has climbed by about $80 in the past 30 days alone. The silver market is booming, yet it still lags behind the gold market. Today, gold soared to a new all-time high, gaining almost $100. It broke the $43.50 barrier for the first time ever. Of course, many of you already know that silver follows gold. Today, gold is unquestionably at the top. But why is the silver market collapsing? Why is there claimed panic in London? And why is silver sold out in India? London is where I would like to begin. As many of you may be aware, the London Bullion Market Association, LBMA, has been experiencing a shortage of free-float silver and has resorted to transporting it by plane from the United States instead of boat due to the urgency with which it needed to be received. According to this story from the Scottsdale Mint, the silver market in London is experiencing unprecedented chaos. The benchmark price of the metal has risen beyond $50 per ounce due to a strong short squeeze, which is only the second occurrence in its history. Liquidity in London is almost non-existent, says Bloomberg. Metal is hard to come by, and traders who are shorting the physical market are paying exorbitant interest rates on loans just to keep their bets open. Currently, there is a lack of liquidity. There has never been anything like what is happening with silver. This graph shows the declining silver reserves at London's vaults. While the free float, or marketable silver in 2019, was at 850 million ounces. Less than 200 million ounces are left as of today. Consequently, the silver market is under tremendous pressure, and the cost of borrowing or leasing silver has soared to unprecedented heights. How then is this resolved? Well, in 1980, authorities limited new positions on U.S. exchanges, so easing the Hunt brothers' pressure. But at the present time, there is no such mechanism. The relief we need is an increase in the actual supply, which can be achieved by ETF liquidations or international shipments. As a costly but essential measure to restore equilibrium to a market where paper prices have once again met the boundaries of physical reality, some merchants are already transporting silver by air. Okay, so that was a quick rundown of the current events in London. How about in India? Is the silver market in a state of collapse? An additional paper published by the Scottsdale Mint discusses the unanticipated scarcity. Given how predictable that is, I appreciate that they placed it in quotation marks. Those of you who are familiar with Hinduism's festival Diwali know that it is currently underway and that many Indians would be shopping for precious metals like gold and silver in celebration. Despite months of preparation, Vipin Raina was unprepared for the unprecedented demand for silver that occurred during India's festival season. Pamp, India, the biggest precious metals refinery in the nation, experienced its first ever silver shortage at the beginning of the week. Silver is literally non-existent, according to Raina, which is why most people dealing in silver and silver coins are out of stock. I have never seen a market like this one, where people are buying at these levels in all my 27 years of experience. That is extraordinary. By the end of the week, shortages had gone much beyond India. London, the world's benchmark hub for silver pricing, rapidly found itself drained of accessible metal as international investors and hedge funds joined the purchasing frenzy, seeking refuge from a sinking dollar or chasing the market's momentum. Interesting point, JP Morgan Chase, India's leading bullion supplier, informed at least one client that it would be unable to deliver additional silver until November. I am astounded by JP Morgan Chase. When I heard it, I assumed you were prepared to sell hundreds of millions of ounces of silver. They could have gone anywhere, but I don't know. Today, Eric Young posted this intriguing text thread on X. Here we have Bob the Bullionaire. Such a beautiful name. Check this out. After LBMA failed on or around October 3rd, his current opinion is that COMEX is being utilized as a vault of last resort. I matched it with the COMEX data so you can see it for yourself. In accordance with the timing provided by Jensen and others, LBMA free float turned red. Last but not least, after only 10 days, the vault of last resort lost 9.4% of its free float. The COMEX silver free float will likewise reach zero in the near future. My forecast indicates an incredible 110 million ounces, and December deliveries are on the horizon. Even free float will eventually run out of some of those ounces. Wow, try saying it 10 times quickly. Nonetheless, this is really insane. It's not only the COMEX, LBMA is also losing silver. A video clip that was posted in India by CNBC is this. A gold and silver dealer's long queue is depicted. This is basically foreshadowing, but I can't fathom waiting in line for so long. If this is happening in India at the moment, it's probably due to the restricted availability of precious metals and the fact that they are about to run out of silver. Even if the United States is currently enjoying a holiday, this could happen there at some point in the future due to the high demand for precious metals. Global demand is high, that much is clear to us. I believe a lot of people are beginning to realize that silver will be unaffordable at some time, which is contributing to the rising demand for precious metals. Morgan Stanley, for example, has recently recommended that investors allocate 20% of their portfolio to gold. Consequently, you should put your money into gold or silver right now while you can. Although gold and silver are already at record highs, I believe they have a long way to go before they reach their full potential. Using the 1980 CPI measurements released by ShadowStats, we can observe that gold previously reached that high of $11,500 when we examine the M2 inflation adjusted all-time highs for both silver and gold. After accounting for inflation, that was in 1980. The highest price that silver reached was $668 per ounce. Consequently, the current prices of both precious metals are significantly lower than their all-time highs. This was posted earlier today on X by Gold Silver HQ, and it pertains to gold. 1/6 of all investable assets on the planet are gold. In 1980, it stood at 22%. Lots of space available, and this time it's not going to be like the 1980s. It's going to be a completely new monetary system. As a result, the price of gold and silver may end up being more than estimated, and their potential is truly limitless. Ultimately, I believe that you should really consider getting into the gold or silver market if you aren't already. Although there was a fall on Friday, gold is up almost $1 to $1,700 so far this year, and silver is already over $50 Aus. So silver reached a high of $54.24, and this might be a great time to buy. Today, it began to improve. Following last week's decline, but silver's continued presence above $50 Aus suggests it is establishing a floor. And from here, I am unsure of its potential future trajectory. This year, some predict prices of $60, $70 per ounce. I want to keep a close eye on silver, and I'm wondering, where do you see it going? Please tell me in the comments area.